What if the money you've saved in the bank isn't as safe as you think? Imagine waking up to find out the protections that have safeguarded deposits for decades have suddenly changed, leaving your hard-earned savings at risk. In America, millions trust the FDIC to guarantee their money, but recent shifts could shake that confidence. What happens if your bank fails and there's no safety net? Could your savings just disappear overnight? That's exactly what we're talking about today, because if you have a bank account, this concerns you. Breaking benefits news only on Benefit Booster. Hey, let me ask you something. What if the money you've saved in the bank isn't as safe as you think? What if overnight, the protections that have been in place for decades were weakened or even removed? Most people don't think much about the FDIC, but it's one of the most important safety nets in the U.S. financial system. It's the reason you can put your money in a bank and not worry about losing it, even if the bank fails. But recently, there have been major discussions about changes to the FDIC, and some of these could affect your savings more than you realize. So, what's actually happening? And more importantly, should you be worried? That's exactly what we're talking about today, because if you have a bank account, this concerns you. First, let's break down what the FDIC is and why it matters. A lot of people don't even know what those four letters stand for. It's the Federal Deposit Insurance Corporation, and it's been around since the Great Depression. Back then, banks were failing left and right. People would deposit their life savings into a bank, wake up the next day, and find out it was gone. That led to bank runs where people rushed to pull out their money, only making the situation worse. To stop this financial chaos, the FDIC was created. Its job is simple: if your bank fails, the FDIC steps in and guarantees your money up to $250,000 per account. That's why you don't see bank runs like in the early 1900s. But now, some recent changes and proposed reforms could shake up this entire system. There are reports that new policies could reduce deposit insurance coverage, restructure the FDIC, or even shift some of its responsibilities to private institutions. One idea floating around? Letting private banks handle deposit insurance instead of the government. Sounds harmless, right? Well, not so fast. Right now, the FDIC protects everyone equally, whether you have $500 or $500,000 in your account. But if private banks take over? There's a real possibility that deposit insurance could become a paid service. Imagine having to subscribe to protection for your own money. Banks could deny coverage to risky customers. That means if your income is unstable or you have a small balance, you might not be covered at all. Insurance limits could drop. Instead of $250,000, what if coverage was reduced to $100,000? That would leave millions of Americans exposed. And let's not forget bank failures. We saw it just last year with Silicon Valley Bank, and the FDIC stepped in to prevent a financial disaster. But if these changes happen? What guarantees do depositors have the next time a bank collapses? For now, your deposits are still protected. The FDIC is still active. But the conversation about restructuring it is happening right now. If these changes move forward, people with large savings may need to spread their money across multiple banks to stay within the insured limits. And for everyday people? This could mean less financial security than ever before. At the end of the day, this isn't just about government policy, it's about whether your hard-earned money is truly safe. So what do you think? Should the FDIC system stay the way it is, or does it need a major overhaul? Let me know in the comments. And if you found this video helpful, don't forget to like, share, and subscribe for more updates on how financial changes impact you. The FDIC has been one of the most important institutions in ensuring trust in the financial system. Without it, the landscape of banking would look drastically different. Most people deposit their money in banks with the understanding that their funds are secure. They assume that even if their bank goes under, the government has their back. That peace of mind is what allows people to confidently save and invest. But what happens if that protection weakens? What happens if the FDIC's role is reduced or privatized? It could change everything about how people interact with their banks. If deposit insurance becomes something that banks control, they will inevitably turn it into a business. Some customers might be deemed too risky to insure, while others might have to pay additional fees to secure their savings. This could disproportionately affect lower-income individuals who rely on small savings to get by. Instead of banking being a safe place for everyone, it could become yet another industry where only the wealthy get the best protections. The potential restructuring of the FDIC could also make financial crises more severe. The reason the Great Depression was so devastating was that people lost faith in banks altogether. Without a guarantee that their money was safe, they rushed to withdraw their deposits. The financial system crumbled under that pressure. If similar uncertainty were to return, we could see history repeat itself. When people lose faith in banks, they start holding onto cash, avoiding deposits, and disrupting the flow of money. That has ripple effects on lending, investment, and the broader economy. Even rumors of changes to the FDIC can create panic. Imagine waking up to news that the government is no longer guaranteeing your deposits. What would you do? If enough people start withdrawing their funds at once, banks could start failing rapidly. The very institution meant to protect financial stability could become the reason for widespread panic. Another issue to consider is that bank failures are more common than people think. Most people assume that only weak, mismanaged banks collapse. But even well-established institutions can run into trouble. Just last year, we saw several major bank failures that required FDIC intervention. If the FDIC weren't there to step in, those depositors could have lost everything. That's the kind of situation that could become the norm if changes to the FDIC are pushed through. It's not just about protecting individual accounts. It's about protecting the economy as a whole. Banks lend money based on the assumption that they have stable deposits. If depositors start pulling out funds due to fear, banks stop lending. That can lead to a credit crunch, making it harder for businesses to get loans, harder for people to buy homes, and harder for the economy to function smoothly. In short, tampering with the FDIC isn't just about deposit insurance, it's about the entire economic structure we rely on. So why would anyone want to make changes to the FDIC? Some argue that it would make the banking system more competitive. They believe private institutions could handle deposit insurance more efficiently than the government. Others argue that the FDIC places too much burden on banks, which have to pay fees to maintain it. Reducing or eliminating the FDIC would save these financial institutions billions. But the question is, who really benefits from that? Certainly not the average American. If banks save money by avoiding FDIC fees, they're not going to pass those savings on to customers. They'll simply pocket the profits while leaving depositors with fewer protections. That's why this issue is so concerning. The people who stand to gain from weakening the FDIC are the same ones who already control the financial system. Meanwhile, the average depositor is left more vulnerable than ever. At this point, it's crucial for people to stay informed. These discussions are happening behind closed doors, but they could impact millions of Americans. If you have a bank account, if you save money, if you rely on the financial system in any way this matters to you, the best thing you can do right now is stay aware, pay attention to policy changes, and be prepared to adjust if necessary. If reforms go through, spreading savings across multiple banks may become essential. If FDIC protections weaken, finding alternative safe places for your money might become a priority. The worst thing anyone can do is assume that this doesn't affect them. Because if there's one thing history has taught us, it's that financial instability doesn't discriminate. The last thing we need is another crisis that could have been prevented. So keep your eyes open, stay informed, and make sure your money is truly protected.